Debt can be a scary word for many people, but the truth is that not all debt is bad. While borrowing money can lead to financial stress if mismanaged, certain types of debt can actually help you build wealth and achieve your long-term goals. This is where the distinction between good debt and bad debt becomes essential. In this video, we'll explore what makes debt good or bad, examples of each, and how you can use good debt strategically to your advantage. Understanding the difference between good debt and bad debt in its simplest form is borrowed money that you agree to pay back over time, usually with interest. The nature of the debt, whether it's helpful or harmful, depends on what you're using the money for and the terms of the loan. Good debt is an investment that improves your long-term financial well-being. It helps you build wealth or increase your future earning potential. Think of it as debt that can eventually pay off in the form of appreciating assets or increased income. Bad debt, on the other hand, is debt that either doesn't create value or actively decreases your financial health. It's often tied to purchases of items that lose value quickly or come with high interest rates that make repayment difficult. Examples of good debt would be a mortgage loan. A mortgage to buy a home is a classic example of good debt. When you buy a house, you're not only securing a place to live, but you're also acquiring an asset that tends to appreciate over time. As you make payments on your mortgage, you build equity in your home, meaning you own more of it. Over the years, your home's value can increase, helping you to build wealth. Additionally, mortgage interest rates are typically lower compared to other forms of debt, and in some cases, mortgage interest may be tax-deductible, further enhancing its financial benefits. Business loans is another form of good debt. If you take out a loan to start or expand a business, this can be good debt if the business becomes profitable. While entrepreneurship always carries risk, many successful businesses were started with the help of business loans. The key is to carefully plan and use the loan money to grow your business in a sustainable way. A well-managed loan can help you purchase equipment, expand operations, or hire additional staff, which can lead to increased profits in the long term. Investing in real estate, whether through rental properties or other real estate ventures, can be a form of good debt. Borrowing money to invest in property that generates rental income can provide long-term financial rewards, especially if property values rise and you're able to generate cash flow. A bad example of debt would be credit card debt. Credit card debt is one of the worst forms of debt, especially when balances are carried over month to month. High interest rates, often 15% to 30%, make it extremely expensive to borrow money through credit cards. Over time, the interest you pay on the debt can far exceed the original amount spent. While credit cards are convenient, they should be paid off in full each month to avoid the crushing impact of compound interest. Payday loans are another example of bad debt. Payday loans are short-term, high-interest loans that are often marketed as a quick fix for people in financial distress. However, these loans typically have outrageous interest rates and fees, trapping borrowers in a cycle of debt. Payday loans offer no long-term benefit and should be avoided at all costs. Car loans for depreciating vehicles. While a car is a necessity for most people, car loans can become bad debt quickly. Unlike a home, a car is a depreciating asset. Its value drops as soon as you drive it off the lot. If you take out a large loan for an expensive car that loses value quickly, you're paying interest on an asset that will never give you a return on investment. How to use good debt to your advantage. Now that we understand the difference between good and bad debt, let's discuss how you can leverage good debt to build wealth and improve your financial situation. 1. Buy a home you can afford. A mortgage can be one of the best ways to accumulate wealth over time, but only if you buy a home within your budget. Avoid stretching your finances to buy a house that leaves you house poor, where your mortgage and housing costs eat up most of your income. Ideally, your home should be an appreciating asset that you can comfortably afford, allowing you to build equity over time. 2. Start or expand a business. If you have a solid business plan and a clear vision for growth, taking out a business loan can be a smart financial move. Just be sure to borrow only what you need and can afford to repay. Create a business plan that includes detailed financial projections. Invest the loan into areas that will grow your business and generate revenue. A well-planned loan can lead to business growth and long-term profitability. 3. Use debt to invest in real estate. Real estate is a long-standing strategy for building wealth. Using debt to invest in income-generating properties can provide steady cash flow, and the property itself can appreciate over time. Just make sure to research the real estate market carefully. Choose properties that are likely to increase in value. Ensure that the rental income will cover your mortgage and other expenses. 4. Consolidate bad debt into good debt. If you're carrying high-interest debt like credit card balances, consider consolidating it into lower-interest loans. For example, if you have a mortgage, you might be able to take out a home equity loan at a lower interest rate to pay off your credit card debt. Debt doesn't have to be a burden if you manage it wisely. The key is understanding the difference between good debt and bad debt. Good debt helps you build wealth or improve your financial future, while bad debt drains your resources and hinders your progress. By leveraging good debt, whether home ownership, business growth, or real estate investment, you can make your money work for you and create a strong financial foundation for the future. Always remember, it's not just about borrowing money, it's about borrowing money wisely. Thank you for watching. Please like and subscribe so you don't miss any other videos.